As an investor, I've accumulated both single income and dual income property. And to be honest with you, there are great pros and cons to each strategy. So Simon, to kick this one off, let's talk about some of the pros around single income property.
Look, the reality is that most people want a single income property. Over 90% of the market is going to want a single income property. So there's so much more desirable. And what that can mean long term is you can generate a little bit better capital gains.
You know, I think the dream for most tenants and most homeowners or investors, especially post-COVID, is to have that standalone property with a nice big backyard all to yourself that's as private as possible. On top of that, I think one of the things that's super desirable about my single income properties is it's just simple and it's so easy.
But the reality is with every pro, there's going to be a con, and that comes with the single income properties as well. So what do you think is the biggest negative about buying a single income home?
You know, I think for me as an investor that's ultimately working towards financial freedom and choices for myself and my family in my future, when I go the single income route, it just means that I effectively have to buy more property. Now, an example of this would be buying a 500K house in Brisbane, Perth or Adelaide that rents for about $400 per week. So effectively I'm 500K into it versus if I went the dual income route and maybe built a $200,000 granny flat that also rents for the same $400 per week. As an investor with that hat on, I'm obviously $300,000 better off, which means that's $300K that I don't have to work for and pay off the debt in the future to be financially free.
Ben, you own a couple of dual income assets. I'm yet to build the granny flats yet just because, you know, I don't have enough money, man. So what do you,
money, man?
But like, what do you love about holding those dual locks?
For me, there's two main reasons. One, the income, like I just mentioned, is significantly higher. And therefore, as a percentage return, my return on my investment from a cash flow perspective is extremely strong. But as a lower risk investor, I also love the fact that it splits my risk. So let's say that you got one amazing property that's renting out and you're retired, right? But all of a sudden, for some reason, the return on your investment drops significantly, or your tenant just decides to leave and you can't find another one. Effectively, you're getting 0% of your total income, where with the house and granny flat strategy, and this has happened to me in COVID, if the tenant decides to leave the keys in the sink like they did for me, then I'm still getting 50% of my rent from the back property through the granny flat. So it massively reduces my risk as an investor, particularly as I add more of these properties into the portfolio. So if I lose 1/6 of my income, it doesn't change my ability to put food on the table. Where if I lose 100% of my income on one property, then I'm buggered.
I love that it sort of reduces your risk long term, but it also can reduce your risk short term as well because, you know, let's talk about the elephant in the room with the huge rising interest rates that we've been through recently. Cost of living has gone up. Aussie households' cash flow has been smashed. So if you have the capacity to build a granny flat in the backyard, it can be a nice hedge against inflation to get a bit more positive cash flow into the portfolio. But I think my favorite thing when it comes to this dual income strategy is focusing on two strategies at the same time. Because what we like to do is target the fundamentals that have historically resulted in strong capital gains, like buying the major metro markets, buying houses in quality suburbs as close to the city or as close to the beach that we can afford. You're going to get the rising tide lifting all ships, right? And then if you can come in and manufacture your own cash flow by building one of these granny flats, and more often than not, our clients in Brisbane are generating some significant positive cash flow from these dual income properties. You're getting two birds with one stone, and I just love that.
What I love about this strategy or dual income is the fact that it enables me to get to financial freedom sooner because I don't have as much debt to pay off, which means I can have choices in my life sooner. And those choices are really the ones that I've talked about so many times before, but to spend the time with the people we care about, to do the things that we enjoy, to serve the world and become the best version of myself in this lifetime. And so I think dual income's really helped me personally with that. There are some downsides to dual income, as we both know. Like obviously it's a much more active strategy. Not every investor or every homeowner wants to go and, you know, physically design, get approvals for, and then build a granny flat. Obviously during that building period, you're out of pocket without getting any income as well. And it's quite disruptive to either your household if you're living in it, or your tenant. Top of that, it's obviously not everybody's cup of tea either. Like some people don't want to rebuy them off you because a lot of people in Sydney, Melbourne, and Brisbane in particular massively value that nice big backyard that they can put a deck and a pool in for the kids. And not every tenant wants to live in them either. Like it's a very specific market that we're talking to. But I suppose the big thing that I've learned is don't necessarily judge the book by its cover. Like from our experiences, all the way through COVID in both Sydney and in Brisbane, these granny flats were fully occupied. Over the last 5 years, I've actually sold a couple of mine, and I would have always expected that the only market to resell them to would be the investment one, right? But I actually sold the first one to a young guy moving up from Sydney in his 30s who actually wanted to put his mum and dad out the back. I did just sell the second one to a self-managed super fund who was looking for a really, really strong cash flow return on their investment. But I had inquiry from more than 35 other people in 2 weeks.
I think the other negative when it comes to dual income as well is it can be really tricky to find the right property that's suitable for this type of strategy. Because you don't just want to go whack a granny flat on any property. You don't just want to go convert a shed or a garage into a granny flat because you're not going to get these types of returns on your investment. So you really need to strategically purchase a really good property, a nice rectangular property where the house is situated closer to the front of the block, where you've got a nice big open flat backyard with a decent amount of side access so the tradies and the machines can get down there to actually build the granny flat. So you can imagine this is a very small portion of the properties on the market. So it does take a degree of patience to find the right property with dual income potential. And on top of that, you cannot legally just go do this anywhere you want in Australia. So you absolutely must consult your solicitor, your town planner, and the local government to determine whether or not you can legally do it. Don't just go out there thinking you can do it anywhere because it's not the way the Australian market works. Make sure that you do your due diligence and make sure that you are buying properties in areas where you can legally complete this strategy.
Beautiful, bro. So to wrap it up, I love single income property. I love dual income properties. My personal portfolio has a combination of both, as will yours in the future. For those of you who are super excited about the market at the moment and like the idea of picking things up while they're on a bit of sale, we'd love to offer you the opportunity to have a one-on-one strategy session. You can book that by jumping over to www.pumpedonproperty.com, and either myself or Simon can catch up with you and talk about where you are today, where you'd like to be longer term. We can talk about the pros and cons of single income and dual income property. You can take that with a grain of salt and go and make it happen on your own, or maybe you can become one of the small number of clients that we work with each month. But either way, we hope you've enjoyed this short video and we wish you all the best on your investment journey moving forward.
Woo, that's a wrap.
That's a wrap.
Getting cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.